Hi everyone, I'm Blair Bryant with the Steller Group here to give you your July 2020 market update. We have been coming to you regularly for the past couple months, before COVID, during COVID, and now in the midst of what we see as one of our biggest real estate rebounds in quite a while. So we're going to jump right on into the stats and what these numbers mean for you if you are thinking about buying or selling a house in Denver, Colorado. The big news, guys, is, as we said last month, Denver is a resilient real estate market. We all questioned what would happen when the market shut down for 2 months, when really you couldn't even leave your home and the real estate market shut down completely. Well, come May 8th, things opened back up and we saw record numbers of houses go under contract in June, and now a record number of closings in July. The numbers that we pay attention to, the numbers that we look at, first, our inventory. So our inventory at the end of June was at just above 6,000 houses. 6,383 homes were on the market come the end of June, and that is a 10% drop from May to June. There's actually less houses on the market, and it's a whopping 33% lower than year on year from last year. So folks, what does that mean? That means that we are in a low inventory market, which points to a seller's market. Another stat that we look at, which is the average price of a sold home in Denver, is now at $509,736. So we are above $500,000 for all homes that sell in Denver, and that's for the average price for both detached and attached. If you're looking to sell a home, that average is actually $560,000. So this number is important for a couple reasons. Number one, it's up year over year. We're up about 3% this June versus last June. So it's a nice increase, and it shows a shift back to a more historical appreciation cycle where you're going to see about 2 to 3% appreciation in your home value year on year. Remember in 2017, 2016, when we saw double-digit gains where houses would rise 10 to 12% in a year? Well, that's really done. What we're seeing now is inventory is being absorbed pretty quickly. Like I said, record amounts were absorbed in June, and those are all going to close in July. But prices aren't skyrocketing that high above unless you're in something, if your house or your townhome or your condo that you're selling or buying is below those averages. So if you are below those averages, let's say you're selling a house that's $475,000. I had a house that I put on the market this June, at the end of June. We put it on the market for $480,000. It's a ranch, very beautiful, in the South Metro area. We had 48 showings in 3 days, 6 offers that came to the table. We ended up well above our listing price. We ended up above $500,000, and we were asking for appraisal contingencies. We were asking for inspection contingencies, and that's because that house was under the average. On the other side, I do have homes that we put on the market in June that have not gone under contract, and those houses speak to what is one of the other big points, which is it's not hot all the way across the board. Really, your neighborhood and your house is going to dictate kind of what's happening with the market. It's going to be your micro market, and that's where an experienced realtor is going to be able to really tell you the average days on market. I'm coming to you live from 5519 Himalaya Road, which is in Green Valley Ranch. This is a patio home built in 2017. It's a 55 plus age restricted community, and we've had some showings and we've had some good feedback, but it's probably going to take us another 2 or 3 weeks before we see our offer. And that's okay. That's the disparity you see in the market, right? And that's what we want to point out in these market updates is don't just listen to what you hear on the news. Tune in to your experienced realtors that really know what's going on in the market overall. So some of the trends we're seeing, some of the things we're seeing overall, this increase in activity, this increase to our sellers market so quickly, well, it does have legs that will tend to diminish as we get into late July and early August. We are starting to see some things take longer to sell. So what we're seeing right now is because April and May essentially was quiet, and now June and July is extremely heavy. The typical timing cycle of our market is a January through June market. So typically, if you put your house on the market between January 1 and June 1, you're going to go under contract relatively quickly, and usually for your asking price or a little bit above. This year, that whole thing has shifted, and I think we're going to see this seller's market continue into late July. But remember, everything has its time, and we anticipate that there will be a Jekyll and Hyde effect to this seller's market. Typically, when we run through all these buyers who are out there trying to grab up a house, taking advantage of historic low interest rates, trying to get into a house before their next lease comes up, trying to get into a house before the next school year starts, well, those buyers are going under contract right now, and by the time we get into August and September, we will see a slowdown. And we also have the presidential election in front of us. So what that means is we're going to have a slowdown. Guys, that is totally fine as long as you are not overpricing your house. Remember, pricing in a seller's market is so important. We talk about how buyers have to walk in, and this is a gorgeous house, as you can see. But man, the pressure on buyers, they feel like they have to make that at asking price or above asking price offer on that first time they walk through a house. So if the house is not in prime condition, they certainly might back away and say, I don't want to get involved in a bidding war. So as you head into this fall market, understand that things will shift, that we will see a slowdown in the market. And I'm not sure that the COVID pandemic is having as much of an effect on real estate as people anticipated when it first happened. We see an economy that is very strong here in Denver. It, of course, is affecting millions of people with their employment. But when it comes to real estate, people have spent a lot of times in their houses, quarantined. And they're now looking at their houses going, you know what, if I'm going to be quarantined for the next couple months, maybe 8 months at best, well, I might want to look at a different house, something that works for me a little better, especially since interest rates are so low and I can sell my house. So, your call to action. If you're thinking of selling or buying here this year, this calendar year 2020, please reach out to us via our website or our phone number, which are posted on your screen. And the first thing we want to do with you is get you a market evaluation of your house. If you're a buyer, we want to get you qualified to see what you can afford. And we want to get you out there looking at what inventory is out there, preparing you for what the real estate market in Denver is like. Folks, it's been great to be with you today, and we look forward to seeing you on our next market update in August.